Right now, one number is dominating the global financial conversation: 70,000. Bitcoin, the world's most watched digital asset, is once again hovering around this critical level. And for investors, traders, and even casual observers, this moment feels heavy. Because this isn't just about price, it's about confidence, fear, and the question of what comes next. Just months ago, Bitcoin was flying high. Headlines were full of optimism. Longtime holders felt validated. New investors rushed in, worried they might miss out on the next big run. Then the mood shifted. As Bitcoin slid towards 70,000, excitement quietly turned into tension. Screens turned red, charts dipped, and suddenly, a level that once felt unthinkable became the line everyone was watching. For many investors, 70,000 isn't just technical support. It's psychological. Above it, hope survives. Below it, doubt takes over. And when Bitcoin briefly dipped below that level, the reaction was immediate. Fear spread fast. Leveraged traders were forced out of positions. Millions, even billions, in value vanished in hours. Social media shifted from celebration to panic almost overnight. Some sold to protect what they had left. Others froze, unsure whether to act or wait. This is the emotional low of the market, the moment when confidence is tested. But Bitcoin never moves alone. As it dropped, the rest of the crypto market followed. Ethereum weakened. Altcoins slid harder. What started as a pullback began to feel like a broader shakeout. The question on everyone's mind became simple but terrifying. Is this just a pause or the start of something bigger? Zooming out, the pressure isn't only coming from crypto itself. Global markets are uneasy. Interest rates remain high. Risk-heavy assets are under scrutiny. Investors are cautious, and when caution takes over, speculative assets like Bitcoin often feel it first. That reality hurts, especially for those who believed the worst volatility was behind us. And yet, this is where the story turns. Because in moments like this, two types of investors emerge: those who panic and those who wait. Some long-term believers see this drop not as a collapse, but as a reset. To them, Bitcoin pulling back to 70,000 isn't a failure, it's a test. A chance to see whether conviction is real or only borrowed from hype. Quietly, while fear dominates headlines, buyers step in. Not loudly, not emotionally, but patiently. This push and pull, fear versus belief, is what defines Bitcoin at every major turning point. So, what happens next? If Bitcoin holds this level, it could stabilize. Confidence may slowly return. A bounce wouldn't erase the pain, but it would restore trust. If it fails, the road could get rougher. Lower levels would come into focus, and the emotional strain would deepen. Right now, the market is holding its breath, and that's why this moment matters, even to people who don't own Bitcoin. Because Bitcoin has become a signal, a reflection of global risk appetite. When it stumbles, it tells us something about investor psychology, about uncertainty, about how fragile confidence can be in modern markets. This isn't just a crypto story. It's a human one. A story about how quickly optimism can turn into fear, and how resilience is tested when prices fall instead of rise. As Bitcoin hovers around 70,000, one thing is clear. The next move will shape the narrative for weeks, maybe months, to come. And whether this moment is remembered as a temporary dip or the start of a deeper shift is a story still unfolding. Stay tuned.